Hello everyone and welcome back. Today I'll be talking about the YouTuber Meet Kevin. Meet Kevin is the biggest financial YouTuber on YouTube. I'll be discussing some of his recent moves and recent controversy he's been having. So recently he announced that he is selling 99.15% of all his stocks, essentially 100%, and he explains why he did that and how he's also going short against the market. What makes this move very, very interesting in my opinion that the S&P and Nasdaq are down around 8 to 15% each respectively, and selling out now is quite, a unique approach. So Meet Kevin is a perma. He always invests in growth stocks. He believes in, of course, he believes in the US market, but he believes in stocks which have not made a substantial profit but show very good growth numbers. For example, he's a big fan of Tesla, big fan of Etsy, big fan of Square. So I was watching his video and I was trying to understand his thought process. I would like to give some of my viewpoints on why he did this. So first he talks about World War One, the Great Depression, World War Two, and gives a comparison on how during high times of inflation, commodities such as grains, gold, silver tend to go up, which I do agree with in high inflation terms. However, those high inflation terms have to be for 6 to 7 years and not, not a 1 or 2 year time frame, which right now the Fed has said recently that they do expect inflation to be here, but not for, multiple 5 to 6 year stretches. So what I find interesting is that he is reverting from a statement that growth stocks are the way to go. He talks about how cheap money is coming to an end, which is true, and essentially where we'll get, a high amount of inflation where the Fed won't be able to step in. They don't have enough financial tools, so therefore it will be catastrophic for the stock market. He also went on to talk about valuations and how they're so rich, but I did find that interesting because he invests in, purely growth stocks without, any, any sort of PE basis or any sort of valuation basis. Hey, the company made 50 billion last year. Maybe let's put it at 20 PE, and let's assure this company is worth 100 billion rather than hey, I like this product a lot. I think it's useful. I see its applications. Here are my projected growth numbers. If it hits that, then the PE will be like 30 or 40. So that's a different way of investing. Personally, that's not for me. So that's a little bit of a background on his investing style. So essentially what he did is that he made a $20 million bet essentially by selling all of his stocks. So his main thesis is that rapid inflation with a massive slowdown in growth, high valuations of around 25 to the S&P while it averages around 17 to 18, coupled with the fact that the Fed won't be able to recover in time as inflation rates so low and the Fed does not have enough tools left in the toolbox. I do agree with what he's saying, but what he's theorizing is an all-out collapse, which I strongly disagree with. He believes the markets, can go, in 1929 levels, the Great Depression levels, where the Fed was clueless. However, I do think now with information that we will prevent, such a recession to come. So what makes this even, a little bit more surprising to me, in my opinion, is that at the peak he had $32 million of stocks in crypto, and he sold out everything at $20 million, meaning he lost 40% before deciding to sell out, all in 1 to 2 days. What's even more interesting is that right before, for many, many weeks, he kept on saying that the market should go up, it will reverse, small caps will reverse, and he actually made a video right before him announcing this video that he expects a short squeeze in small cap stocks of up to 2 to 3x depending on short volume, which I find very contradicting to his opinion and to his style. Selling out of all your stocks in crypto, and then right before that you say that you expect a short squeeze in some of the stocks you hold is quite the opposite. So the biggest stocks that he held as per his video he made in November 7th were Etsy, Tesla, and Enphase. And all of these stocks have had substantial downside movements. Etsy is down over 52%. Tesla's not as down as much. However, it is still down. It's down around 22%. And Phase Energy is down well over 50%. But the most interesting stock was Matterport. I remember constantly, me, Kevin was talking about Matterport, how it's the next best thing. And it has declined over 72% from its top. So many of the stocks topped out at February and November 2021 respectively. And that's why, instead of following these YouTubers, I think you should do your own analysis. You should have some sort of concrete evidence on why you're buying or selling that stock. And to be quite frank, I'm not a big fan of Meet Kevin. I don't really understand his reasoning on buying, some of the shares. I understand he is wealthy and he can afford, to lose 10 to 20 million dollars, but ordinary investors, retail investors can't lose 40 to 50% of the portfolio and have, a good retirement. So instead, I recommend always doing your research on your own stocks. And if you are unable to do that research, you should focus on ETFs. You should always focus on, the S&P. I always like the S&P. I like the VOO, which is the S&P Vanguard. They're both, high quality ETFs with low expense ratios, and over time you'll get, almost guaranteed returns over a 30-40 year period as long as the US market continues to grow. However, if you're ultra bullish in certain industries, you can always buy, certain industries ETFs. For example, you can buy XLK, which is the technology sector Spider Fund, which has outperformed the S&P by around 100%. So, that's my recommendation. I'm pretty disappointed. I'm not surprised though with this video, but we also have to understand that me, Kevin, he is his own individual person. He can make whatever content, whatever video, he can buy and sell whenever he wants. But I do think that whatever content you put out can't change on a day-to-day basis. You can't say I'm all in and then sell out the next day. We had no clue that me, Kevin, was going to sell out the stock. Personally, I would invest in value stocks. When it comes to value stocks, you won't get that sort of volatility you will in like no growth stocks, no earning stocks like Tesla or Etsy or Enphase. Thank you for watching and have a good day.